All right, mate. Yeah, let's look at GRT and audio. Anyway, GRT here. If I zoom out, we can see it is down, still down 96%. It's down into accumulation areas where you can be prepared to buy and average down into to make sure you have a good average entry for the next bull market. So that is interesting, that it has not moved yet, down at 11 cent. So I was just looking here. Actually, it's still a pretty large market cap. I actually thought this would be a lot smaller market cap. It's number 57 on the list. God, I never knew that. I had no idea that this was like a top 50 coin. I mean, it's top 50, well, 60 coin now, 57 or whatever. But you know, it's down 96%, and we're, you know, that we're still that big. I don't know what this coin does, but that leads me to, you know, you need to be careful that it's developing well as a company. I mean, but if we look at SHIB and Doge, you know, I suppose any coin can really get up there, but they do have a following. As far as the daily, this pattern here is, you know, it's a tricky pattern. It's a choppy, crappy pattern, because price needs to get back inside the white 100, and if it does that, you can then be bullish on it. Buying below this is a bit of a knife catch, trying to, you know, you want the white 100 moving average to come in and support price in here, and then you push up into the apex. Okay, so let's just jump out a bit here and look at some larger time frames. There's a 3-month bullish stop hunt right here. Not the greatest action, to be honest, but it is a 3-month bullish stop hunt. There's a bearish stop hunt here. So here's the confusion. We've now created a range, right? We are stuck almost dead center, right? If I put this line here, you can see that we've created a range of bearish stop hunt and a bullish stop hunt, and the price is sitting dead center of that range, right? So not very good. When you create a range, you want to be buying to lower down. If you buy in the middle, you're likely to get chopped up. If you buy into dips of the range, that's usually a better place to be buying. So with that in mind, let's continue to look at the other time frames. So the 2-week is bearish. Well, no, the 2-week is red actually. So what does it say? Well, it says the better thing to do is probably trade a new 2-week candle in 4 days time. I mean, if this is going to be bullish, properly bullish, it's probably going to be in a new 2-week, and there's probably going to be a dip down to take some sort of liquidity here into the wick like this, and then if it is truly going to be bullish, you get to move back up. So that's probably the best way to play it right now. I mean, this is why the market is so bad the last week, because we are getting these bearish wicks. You know, these bounces in a red 2-week candle. We're getting that bounce, and it means it's very crappy, choppy, shitty action. So it doesn't make for good trading. Yes, it is flipping green on the week here, but it's unlikely to get too much upside over the next 4 days, because the 2-week is not going to flip green. That's, you know, in my opinion, that's just not going to happen. Yeah, I just don't think so. I think this will need to consolidate a little bit down here, and then you can see a new 5-day candle. This 5-day candle doesn't look like it's going to do too much. There might be a small up move here, right? A small up move, because the 2-week is kind of telling us that the upside is limited until a new 2-week candle, and a new 2-week candle is also a new monthly candle. So that'll be a very important time, and then also that is then pushing us and leading us into the merge. So I do think we can get some bullish action here, but I don't see any big move yet until a new 2-week. Okay, so audio, it was audio, wasn't it? Yeah, audio. Audio is, this is a bearish candle. See this large candle here? That's bearish because it's breaking down here through structure and closing below here, below here, below here, and you know, it's coming down into the lows of this. So technically that is a bearish candle, it took liquidity, it had a bearish stop hunt up here. So overall it's a bearish candle, and now we are starting to flip red on a new 3 month after a bounce up. Well, technically that's bearish also. So it is giving us warnings that price may want to go lower, so you just need to be careful. Let's continue to go through some time frames. Well, what it's saying here, you know, this is rejected. We've had a bearish monthly stop hunt. We flipped red on the month. We are trying to drop and trying to get that continuation to the downside. This is weak, a lot weaker than most coins, because most coins are green on a 3 month. So if there's a drop in the market, this relative weakness will probably drop this pretty hard. Again, it's red on the 2 week. Need to be careful. And now, can there be some upside? There can be, right? This might be a fake out lower before we flip up green and move on up. What have I drawn there? So I was looking for the wick up in here. This one did seem to wick up. It got a bearish stop hunt. But but what I'm looking at here, you can see that there was a rejection here like this, and you know, it did manage to push back up and grinded its way higher out of it. So that's what you need here. There's a bearish sign in the market right now, but this needs to do something like it did back here and prove itself. So a new 2 week needs to open up and flip green, and if it does flip green, it's a buy, because when you're red on the 3 month, price needs to prove itself straight away. Otherwise, it's going to be bearish and break down. So sometimes you fake back down into the red 3 month candle before popping up and flip green again. So I would only trade a new 2 week on this. If it flips green, it is a buy, and for somehow we could get 2 to 3 weeks move, maybe a month move. Well, 2 to 3 weeks is into the merge, but you can see here, once we popped up in bullish, you know, most people probably didn't think it was going to moon, but it absolutely mooned. Most people don't think it's going to moon here. Can it get some upside into the moving average and maybe even higher? Well, the market needs to prove that. You need to be careful. It is showing some bearish signs, but when you get bearish signs like this, it is into the exact time when the market needs to change and push higher. So if it's red on a new 2 week, I would stay away. If it flips green, then it's worth a trade because it's trying to reverse.